Well over 90% of traders use technicals, and well over 90% of traders are not making money. And we think it has to deal primarily with technical analysis. All right, so we're gonna do a deep dive on technicals and why you probably shouldn't be using it on the Kleveland and Kleveland show. All right, traders, what's up, guys? Welcome back to the Kleveland and Kleveland show. I'm Cleveland.
I'm Kyler.
And we wanted to do, again, a deep dive today on technical analysis. It's probably our most asked question in regards to how you should use technical analysis, or even if you should use it at all. When people come to this channel, they're usually like on the fray or like right on the edge of basically realizing, okay, should I start switching up my methodology, right? Because the internet kind of showed you or parades around the idea of all you have to do is just stare at this chart and somehow you're gonna be able to make money for the rest of your life. I'll just look at the chart. Just stare here in the chart and draw these lines and you're gonna be able to make a profit. Guys, that's so unrational, right? So we're gonna be going real deep on why you guys shouldn't be using technicals, probably in the context that you're using it. And we may give a few tips on how to start to look into fundamental analysis and what you guys can do to get an edge, all right? So if you guys are new to the channel, welcome, excited to have you in. Make sure you guys subscribe and are notified whenever we come out with a segment. And if you guys like the segment, if you like the channel, like the video for your boy, I really appreciate it. Okay, so real quick, all right, we know we're gonna get a lot of flack. We know there's a lot of people that are like, dude, I've been killing it with technicals for the past 20 years, bro. Bullshit. Okay, so let's set the stage here. We wanna really pull apart the difference between technical analysis and price action and market structure, right? Because those are two completely different things, all right? So for us, price action and market structure are extremely reliable, right? Price action and market structure, well, let's first talk about market structure. Market structure for us deals mostly with how the current market participants have the market positioned at that given time, right? Whether it's a trending market, whether it's consolidated, whether there was just a massive parabolic move to the upside, right? That's the current infrastructure of what the market looks like. Extremely important. That's what we assess and look at every day, right? Price action, a little different from market structure, right? Price action mostly deals with volatility. Price action can deal with those market inefficiencies. Price action can go deeper into things like some of the candlestick infrastructure, right? We can look at candlestick infrastructure on higher time frames on many occasions, and then also price discovery as well.
So with price action, you're able to rationalize where things are cheap or expensive, just kind of like the t-shirt example you talk about. And once you know where things are cheap or expensive, you're able to get a better understanding where to get in at.
Right, 100%. And technical analysis does not put purely into the context of the exact, again, how expensive or how cheap the asset is. First of all, you can't really even determine expensive versus cheap if you don't have a fundamental bearing on the price of the asset. All right, so we just detailed market structure and price action. And again, technical analysis for us is completely different. Technical analysis mostly is trying to dictate future directional moves based off of purely price. Yeah. And that's where me and Kyler and all of our traders here at Top Traders mostly have a problem, because how do you determine a directional bias purely off of price itself? There is a case to be made that you can look at a trending market, right? And you can say, okay, well, now I can start using some type of moving average or even just assessing an Ichimoku cloud, right? I mean, all the different things that can kind of help you rationalize that, hey, this market's going to continue trending. You got to be careful with that ideology, because there's so many scenarios where trends will end, again, based off of the fundamentals and the underlying sentiment of the market, which is what truly is driving the market. So right there, think about that. When you place the claim of the trending move on the technical perspective, you are completely disregarding what's happening from the fundamental perspective.
Exactly.
Makes sense?
And I think it'll help people rationalize that if you can understand who you're going against in the market. It's guys that have PhDs in finance and business and algo traders and high frequency traders, and you can't tell me that having a couple lines on a chart is going to give you an edge against these guys. So you really have to have a better understanding of what's driving it, having a set strategy that you're going to execute on. Then you finally have an edge and a rationality behind everything.
Right. And so we had three things real quick that we wanted to touch on and kind of give you guys a step-by-step idea on maybe the three things that you need to look out for, or why you should not be using technicals almost at all, right? And so for our first idea, or our first reason why we think technicals, you should undermine it just a bit more than you probably are at the moment right now, is because technicals don't give you that quantifiable edge. All right. It doesn't give you that pure, clear, crystal clear reason why you are outperforming or beating your opponent. Right. So the example I like to use a lot is a basketball player. Right. So if a guy is 6'7", all right, and his opponent is 5'9", what's his edge? His height, right? He's absolutely taller than him, and there are many scenarios where that's going to play in his favor. Okay. Your Forex trading edge honestly needs to be just as clear. Right. So if you tell me right now what your technical edge is, break that out for me. Right. I want you guys to write out, and we'll talk about it and we'll say if that's an edge or not. All right. Based on whatever it is that you mentioned in the comment section. But we want to see what your technical edge is. But if you say anything like, well, I take a trend line break or I the break of the neck on the head and shoulders pattern, what does that actually mean? Right. I mean, again, these are very, very sophisticated individuals that are trading in this market. Let's say it's a bearish head and shoulders pattern, right? Why would some market participants be buying in that instance? And why are you, with your technical indications, selling in that instance, right? So that's the question you always need to ask yourself. What do I have in terms of an advantage over that particular market participant at this very moment? And I'm sorry, technicals for us don't give us that clear it doesn't give us that clear blue reason why we have an advantage. All right.
So number two, it doesn't take into consideration the underlying currency pairs. So you could have two currency pairs. Let's say the GBP AUD and the GBP USD. The GBP AUD could be trending and the GBP USD could be in consolidation. You're really not understanding what's actually causing the consolidation or causing the trending move in the GBP AUD. So you're not really able to understand the underlying currency pair.
Right. No, that makes a lot of sense. So you could have a technical pattern, like you said, on the GBP AUD that's saying, hey, you need to buy this pair right now. But you could have a technical pattern on, again, the GBP JPY that says, oh, this is a massive sell.
Yeah.
But at the end of the day, what is that pound component doing? Right. The pound in both of those instances obviously is going to be selling or negative, or you have a neutral idea on it, or you'll have a long idea on it. Right. But from a technical perspective, if you're not rationalizing that, you're merely just looking at the chart and saying, okay, I want to buy this one and I want to sell this one, but you're disregarding the actual currency in the pair itself. Right. So that's another very dangerous thing. Right. So we could have 6 different currency pairs up right here on the screen. All right. And from a technical perspective, we could have different directional biases across the board. That's not how you want to execute. Right. And so at least if you're going to assess from a technical idea, incorporate the idea that, all right, if I'm buying the pound in this context, or if I have an urge to buy the pound, across the board, I need to be buying the pound. Because what's going to happen is you may have a beautiful technical alignment that you need to be selling the GBP JPY, but then you could have another beautiful technical alignment that you need to be buying the GBP CHF. But if that underlying trend for the GBP is a buy, then that GBP JPY is going to tank. Right, that's not going to be a very profitable position for you. All right, so again, that's another reason why technical analysis on the front end, if you don't go deeper than merely assessing the chart, that's why it can be very dangerous for you. Right, I hope that makes a lot of sense. And so number 3, it's not specific enough. Right, so whenever we talk about an edge, or whenever we talk about, hey, this is exactly how you make money. The basketball guy is 6'7", his opponent's 5'9". That's very specific. That's a very specific way that you're going to outperform, right? From a technical perspective, what is the specificity that allows you to continuously and consistently beat your opponent every time, right? So in some contexts, you know what the technical guy will do? He'll say, hey, I want to play this head and shoulders pattern, right? And then what's another thing he'll want to do? Maybe
trend lines. So take a bounce off a moving average.
yeah. I mean, a double top, right? They'll do flag patterns, and then they'll do anything technical. Everything.
Candle patterns.
100%. And so that's another big thing there when it comes to most technical traders. They usually have a barrage of different technical ideas and structures that they'll play. They don't have a consistent, quantifiable, hey, this is the one I'm going to execute on over and over again. And what starts to happen, you're literally playing against a multitude of different market participants, and now you're spread too thin. You're the master of 1,000 kicks, right? Which is not going to be obviously work out too well for you. So, I mean, anything else in that regard? Or?
Well, I guess I would say a lot of retail traders will try to just get as much technical analysis as they can, like try to gather info on trend lines, moving averages, Ichimoku, indicators, and whatever else, and all these candle patterns, and they don't have a set way of even using them.
Right.
So like you said, it's just not specific enough. and you don't have a set strategy within all that. So you're really just to me, it's a guessing game then.
Right. No.
Just guessing with each indicator.
No, definitely. Basically, you just said it's not process driven.
No,
right?
Not at all.
It's not step by step. Hey, this is what I do every single time, right? 100%. So again, if you're going to use technicals, we don't think you should. If you're going to use them as your directional bias or basically as your premier edge in the market, doesn't make sense. But if you're going to do it, at least stick to one thing, right? Be the king of double tops or the queen of double tops, whatever it is.
Learn the nuances of everything.
100%, right?
System.
Exactly. Yeah. So there's a difference between changing your strategy and refining your strategy. Most retailers, what do? They're changing up their strategy. The second you change your strategy or incorporate a new variable in your strategy, 1,000 new variables just popped up.
Yeah.
Right? So those are the three things that we think, again, from a technical perspective, this is the biggest thing holding the retail trader back. Because they get on the internet, immediately when they get on the internet, they're sold this dream that all you have to do for a full-time living is stare at this chart, and somehow you're going to make money. Guys, the reason you're not making money right now is because that's what you're executing on. All right? You got to go a little bit deeper, and there is a lot more of a process that you have to bring in to the model, all right, for you guys to be profitable. If you don't bring that process in, then you're just rolling the dice.
And you want to treat this like a business, and higher level guys are treating this as a business. They have a system, they have a process on how they execute.
Right.
So it would make sense for you to also.
Right. So this is what we're going to do. We have, again, a fundamental quiz where we test the ideas or your rationale or your logic on the fundamental analysis to help you guys start to trade over into a more logical and process-oriented trading methodology. All right, so if you guys want to take the fundamental quiz, it's 11 questions. It's going to ask you a lot of different things dealing with the economy. It's going to give you at the end how accurate you were. But at least it's going to be able to show you how sophisticated or how much you probably need to learn or know after the fact, right? And so what's cool is if you don't perform well, it's going to start sending you different tips and tricks on certain things dealing with the general economy. So it's going to be very helpful. Cool?
So for the trade of the week, we're looking at the USD CHF. We can see that it's at parity right now, which is interesting.
Oh, wow, yeah.
Yeah, so you can see a lot of the times when it gets up to parity, it does turn around.
Yeah.
And the fundamentals that we're looking at, we have Powell speaking later, so that could affect the USD. And we know a lot of that up move in the USD CHF was USD strength. So
right.
And we also know that with Frank, it acts as a safe haven sometimes, or investors will repatriate their money, or also known as a carry trade. So if there's any risk off sediment, we could definitely see unwinding of that and some CHF strength coming back into the market.
Right. And so if we get a sell side move, that'll be CHF getting stronger. Yeah. And right now, the dollar is seemingly near its lows. I want to take a look real quick. Take a look at this dollar index. What do you think about this one? Now, this is the shitty dollar index, but I want you to notice this price move. Look at that. We're bouncing off of that 23.6 right now, right? So this is the only thing that would stop that CHF play from, I guess, working out. Would really be this dollar being able to break up, continue to break to the upside here on this dollar index. If we look at it on the daily, we can see that we've just really ranged around. We tested the low about a few days ago last week, but subsequently since then, again, we haven't broken outside of this range here, which is kind of really right here, right? So we haven't been able to break outside of that. We get a break outside of that, then the USD CHF play is probably kaput.
Yeah, I wouldn't even want to play it then.
Okay, so hopefully we can get a continuation to the sell side, or at least just a retest of the low here. Because if we get that retest of the low, then on the USD CHF, we'll see a nice situation where we'll be catching the sell right at the top of that consolidation. And so in this context here, we are looking at the market structure, right? So in this example, we're looking at the market structure. We assess the market structure on the dollar component, so we kind of see exactly what the dollar component is doing. And now we really get to see exactly, okay, well, since the dollar's doing this, then that means the CHF at this moment right now obviously has been getting slightly weaker, because this is a weekly, right? And so if you guys notice here from the weekly perspective, look how from the low this CHF came in at. So from 97.22, and we're trading right now at, what's that? Oh, we're at parity. So almost a 300-point move. A sell side move would be pretty nice. So we're going to keep an eye on this one. I think that is a good trade of the week.
It's definitely possible you could see more USD strength, but I feel like you'd have to see Powell adopt a more hawkish tone,
right,
and not have such a patient tone, or or anything like that.
Is there looking like there's going to be 2 hikes? Is that still the trend that he wants to see?
I definitely, like later on in 2019, I could see 2 hikes. And I think that's what they're seeing. But as of right now, they want to be more data dependent and more patient. And they just need more clarity just to execute on a rate hike.
Okay. No, that sounds good. And closing out, we do have a question from one of the older Kleveland shows. This one was pretty interesting. What's it about?
So someone's asked, if I don't use a stop loss and I have $1,000, and I have $1,000 in my Forex broker account, and let's say my broker gives me 1 to 200 leverage, so you'd have about $200,000 of buying power.
Mm-hmm.
If I place my trade, which is a 1 standard lot, which you should not do on a $1,000 account, and the price goes against at first negative, my back profitable.
So that's interesting because that video was the leverage and margin video, and they're still asking, can I over leverage the account?
Yeah.
Guys, don't do it. Like it's this thing that people are fighting where they don't fight. I mean, I get that. You're gambling right now, right? I mean, you would literally be down 10% of your account if the market goes against you 10 pips.
Yeah.
And we're right now in the most volatile market that we've been in the past 20 decades in Forex.
Yes.
So 10 pips is nothing. 10 pips can happen in a blink of an eye, right? So 100% you're going to blow yourself up, even thinking like that, or even trying to rationalize this. I mean, you frame things very nicely. It sounds sophisticated. Mm-hmm. It's a horrible idea, though, right? I mean, he put great context into all of it, and even still, it's going to be the thing that destroys the portfolio. So absolutely not. You should not assess markets in that capacity. You should not. You also shouldn't put on a standard lot on $1,000. Mm-hmm. And some brokers are going to margin call you because you're down $700. And would only have technically $300 left over of actual capital. So it just depends. What's it called? The margin.
You really have to look at your margin closeout value, which will tell you when you'll get margin called.
Yeah. So I mean that's it. So look at the margin closeout value. Don't do it. Right. And so outside of that, you should be good as long as you don't do it. And maybe just look at the margin closeout value for just other instances. So be very careful, guys, with trading. We're going to do the best we can to help you guys rationalize the right way to do things. But that's all we can do is help you rationalize it. You are in full autonomous control of your own portfolio. And so at the end of the day, you're going to be the one that makes yourself a profitable trader by having rules and disciplines or not, right? So that's the best we can do.
So guys, thanks for tuning into the Kleveland show. Make sure you do the fundamental quiz. The link will be in the bio. It'll definitely help you guys a lot and give you a little insight of how we execute. Make sure you tune in next time. We'll see you guys later. Thank you.